Okay, today we have Jonathan Awde, CEO of Dakota Corp. Thanks for joining us, Jonathan.
It's a pleasure to be here. Thank you.
Great. So tell us a little bit about your experience.
So I was a founder, president, and CEO of a company called Gold Standard Ventures that developed an oxide heap leach project in McArlen, Trenton, Nevada, and was sold to Orla Mining last year. And I am currently president, CEO, and co-founder of Dakota Gold Corp. My background is capital markets and finance.
Excellent. So how many years total is that about?
I graduated from university in '99, so I've had 24 years in the business.
Excellent. So 24 years brings a lot of wisdom. Tell us about some of your wins and some of your losses and what you really learned from them.
I think you always learn more from the losses, and I think that there's a lot of lessons to be learned in the mining sector. A lot of cycles, fun, money flowing in, money flowing out. I was with a company called Northern Star Mining that, let's just say, I was investor relations asset in the Abitibi region in Quebec, and didn't do enough DD on their strategy, and it ended up going bankrupt. But it was one of the best lessons I learned, because now I almost do overkill on data when I look at projects. And rather find fatal flaws up front than get to a place where you brought a lot of investors in and then you have to try to explain things.
Exactly. It's amazing what you learn from the down ones. And going in, if you believe going into recession, you have to be a little more conservative. And it sounds like you have a conservative outlook because of that.
Yeah, and it's great being able to partner with someone like Bob Quartermain, who's the co-chair and largest shareholder of Dakota Gold Corp, just given his experience with Silver Standard and Pretium. He brings a certain cadence, he brings a certain principles to him. Cost of capital, being aligned with shareholders, is something that I also live by.
Okay, so he sounds like a great addition to the team. What other people on the team you want to describe, and what's different about him?
Our other co-chair, Steve O'Rourke, was global head of petroleum exploration for BHP, so managed multi-billion-dollar programs. He's from South Dakota, went to South Dakota School of Mines, so he's been a phenomenal influence and resource for us. Technically on the ground and lead, it's really James Berry and Jerry Aberle. So James Berry is our Vice President of Exploration, and Jerry Aberle is our Chief Operating Officer. Jerry was the last mine manager in the old Homestake mine before it shut down. So excellent technical resources. And we just brought on Patrick Malone, who ran Barrick's Closure Group, to be our Chief Sustainability Officer. And he's been just a wonderful addition to the team as well.
Okay, great. Sounds like a great team. Talk about some of your properties and where they're located.
So we acquired a bunch of assets out of Barrick's Closure Group in 2020 and 21. So when Barrick bought Homestake in 2001, they didn't buy Homestake for the assets in South Dakota. They bought it for other assets that Homestake had in its portfolio. So this would be the third deal out of Barrick's Closure Group that we have done during the Mark Bristow era. The other two deals being Skeena and K92, which have done incredibly well. So the three deals that we did with Barrick, we acquired an asset called Maitland, which is immediately contiguous with the old Homestake mine and contains a couple of historical resources and a discovery that Homestake had made back in 1993. The second deal we did was an option over the surface of the old mine, which gave us exclusive access to 125 years of data. And the third deal we did with Barrick was on a project called Richmond Hill, past oxide heap leach producer. And now these are all on private ground. And I do want to spend maybe a minute talking about this. It's a really important distinction to make, because there is a negative perception and narrative around permitting in the US. And US Forest Service and BLM can be very challenging. Private ground, you're not subject to a federal permitting process. So your timing is far more advantageous on private ground.
Yes, for sure. I mean, average permitting process about 10 years, right?
5 years, 5
yeah.
to 7 probably.
Okay.
Yep.
Yeah, that's a long time.
It is.
A long time to wait. So you got into the resources of the company. You want to talk about the mission as a whole, or anything more broader?
Look, I think to be consistent with something we've talked about for a long time, the gold industry needs more consolidation. There's too many companies. If you look at a table representative mining camp, and there are 10 juniors that own this mining camp, there should be one. There shouldn't be 10 G&As. You should be looking at the asset as a whole. How do we develop it? How do we permit it? How do we explore it? and there's too many companies. So our vision is to roll up and consolidate as much of the district as we can. We've gone from 5,000 acres to 50,000 acres. 14,000 of our acres are on private ground. So it allows us somewhat to move with a cadence and somewhat control our own destiny, being on private ground. When we acquired these assets, our number one concept was proof of concept at Maitland to find mineralized Homestake Formation, which was what Homestake was mining for 125 years. We discovered the JB zone. Our last intercept was 5 meters at 19.5 grams per ton gold, so high grade, consistent with what was mined in the old mine for 125 years. We have another discovery at Maitland, which is a younger package of rocks in the tertiary, where Homestake never assayed for that. So we think that's a very significant opportunity for us. We can now trace it over 11,000 feet. And at Richmond Hill, we wanted to go underneath this oxide that every other company was focusing on. And our hole last week, which hit 300 meters of almost a gram, demonstrates that there's mineralization in these basement rocks in the Precambrian. So we think we have a land package and assets to become a mid-tier producer.
Interesting. I've interviewed a lot of executives. A lot of them don't talk about it. We need consolidation. So with that said, what is the ideal, consolidation, let's say, over the next 5 years, and what part of that would you be in?
So I'd say the reason why most companies don't want to do M&A and consolidation is because they're going to be out of a job. For some people, it's a lifestyle. So for Bob Quartermain and I, we put almost $10 million of our own money into this thing. So we're super aligned with shareholders. Quartermain doesn't draw a salary, and what he would receive as non-exec chair, we put towards our ESG fund. But consolidation for us, look, the Homestake area is one of the largest concentrations of gold anywhere on the planet. It's still the largest single gold mine in the history of the US. So, there's a lot of exploration work to do. This data set we got from Barrick, which was 125 years of data, really informed and guided this larger exploration program and our consolidation efforts. So we feel like we're barely scratching the surface, really focusing on doing as much work as we can on private ground to not have to deal with the federal permitting process. And it's to create large mineral endowment on our projects and to move those with a cadence towards development.
So the upside is less politics, less time to get permits. What's the downside of private? Cost more, or what kind of?
Well, I think the perception around can you permit anything in the U.S. Everything kind of gets lumped into one land bucket, whether it's U.S. Forest Service, BLM, or private. So we try to take the time to educate our current shareholders and people who are looking at us that yes, we do have U.S. Forest Service. Yes, we do have BLM, but our 4 rigs are active right now on private ground. So I think just taking the time to educate people, again, because there's such a strong narrative about permitting in the U.S. and about can you get work done in the Black Hills. The Black Hills is a phenomenal place to work. South Dakota, the people are amazing. We've had total community support. Ron Everett, who works for us, is the actual mayor of Lead. So we've got strong ties to the community, and we've had great support to do what we're trying to do.
So you're working on perception. That's great. Yeah, that's probably an investor pushback. What other investor pushbacks do you get?
Well, you've got a $200 million market cap US with no resource. And, because we're a US company, we have these 3 historical resources that are not SK 1300 compliant, that have a large density of drilling into it. We're going to make those compliant. And I think those numbers will surprise the market. But again, until you deliver that, you're in sort of you're guilty until proven innocent. And that's the kind of market that we're in. So, but I think we haven't really been hearing those in the last 6 months just because we've made these 2 discoveries. And I think the people who are technical are really starting to get it, understand, gotten over the permitting discomfort. And now, wow, you've got 3 large material catalysts to deliver shareholder value, which is the tertiary opportunity at Maitland, which we call the Unionville discovery, the JB discovery in Homestake style mineralization, and then this Precambrian unit at Richmond Hill. And there are also 4 of these breccia pipes at Richmond Hill that haven't been tested. The only one we tested, our best drill hole, was 30 meters or 6 grams. So you've got 4 strong opportunities to deliver shareholder value, and that's super exciting.
Yeah, I bet. I mean, you said it's one of the richest locations and largest locations, right, in U.S. history. So let's get into the shareholder mix now. What does it look like, investor, private, retail?
Sure. So it's important to note that management is super aligned with our investors, with our shareholders. Management owns just over 25% of the company. We've got half a dozen institutions that control another 25 to 30%. Some of the bigger names who are quite selective in their choice of how they allocate capital. And then we've got a relatively large retail component, strong U.S. retail ownership. So it's and then we're also in the GDXJ and the Russell 3000.
Great. So, how would you compare yourself in stock price compared to some of your peers?
So it's not a kept secret anymore, but there are two large industry players who are getting redemptions right now. So they've had to force sell to raise capital because they're open-ended gold funds. So we were $3.20 2 weeks ago. This one seller dropped us from $3.20 to $2.80, which is kind of where the stock is today. At $2.80, we'd be down about 7% for the year, when our peer group is down 25 to 30% for the year. So, I'm not proud with being down 7%, but it is one of the more challenging environments I've been in. But I think just real quick on the gold market, so you've had this relatively strong gold price in the 1900, 1920, 1930, an extremely strong dollar. The fact that gold has kind of held that 1900 level in the face of a very strong US dollar, rates rising, inflationary environment, I think it speaks very well. And historically speaking, anytime you see these kind of redemptions and record short interest in the gold space, it usually coincides with major inflection points, major turning points in the market. I'm not implying tomorrow it's gold's going to be 2000, but I think these are markers that you look at, and the longer you do this, the more it turns when that exhaustive redemption selling is done. And I'm actually quite excited about the next 6 to 12 months for us.
Yeah, I think if we end up in a recession and everybody's focused on the regular stocks and tech and AI and things like that, potentially in recession, cyclical goes into more secure funds. And so I see that too.
Yeah, and if the US government cannot balance their budget with how strong the economy has been, and you're still running $1.5 to $2 trillion annual deficits, the cost to service your debt is approaching $1.2, $1.3 trillion every year. U.S. national debt's at $32 trillion. So if things do pull back, it's going to be really interesting to see who buys U.S. treasuries, because there's been a strong effort in the eastern part of the world, the BRICS, to settle transactions in some other form of payment, whether it's gold, other currencies, new currency. So I think that's really interesting. The US dollar is still going to be the world's reserve currency for at least another decade, probably 2, but you'll see a gradual erosion, 1% or 2% every year, from the 75 or 80% of global trade that's settled in US dollars today.
Right, I agree. I mean, BRICS is very strong, and when things stop trading in US dollars for oil, it's going to be a total game changer. So let's get into your balance sheet. You have a very ambitious ideas of growing in mergers and acquisitions. How is the balance sheet, and when would you need to go to capital markets again?
Yeah, so we've got just under 20 million US in the bank. I would say, look, at some point in the next year, we'll have to go back to the market. Again, cost of capital is very important to us. We do have an ATM in place. So we have utilized the ATM a couple of times over the last year. So it's a much cheaper cost of capital, a much tighter discount. But yeah, to keep 4 rigs running and drill 35 to 40,000 meters over the next year, we'll likely have to go back to the market at some point. We're burning about $1.7, $1.8 million a month. So there's a bit of runway there. But of course, I don't want to let Treasury get below a certain level, because then it becomes a self-fulfilling process where the market will start to tell you where it wants to give you money.
Yes, exactly. So what are you open to other than more shares? What other types of financing?
I think equity is probably the only thing we consider at this time, just given that we're an exploration company and we don't have cash flow, we don't have revenue. And I think when you start to see junior explorers take on debt, we might consider a long dated convertible, some kind of convertible instrument, but taking on debt from an exploration standpoint, I think is a kiss of death, because you've got permitting risk, you've got finance, construction risk, building. So I wouldn't want to do that unless we were a lot closer to gold pour. If it comes down to we're developing this on our own, there would obviously be a debt piece. We'd consider that, but we've got a couple of years of kind of head down exploration, really exciting opportunities and multiple opportunities for us to add meaningful ounces to the books.
Great. So let's kind of get into potential joint ventures, partnerships. What's your ideal partner in joint venture down the road?
So I'm not a huge fan of joint ventures. However, I think when you find the right partner where the interests are aligned, I think that's important. And I think that there could be an opportunity for that in this district, because again, it's so ripe for consolidation. And so I think if we were able to find the right partner that had that shared vision, where we were able to maintain some level of control and autonomy, that would be an important thing for us. But again, we're still in this exciting part of the Lassonde curve, and we think that this next sort of 2 years for us is very exciting. But I'm sure at some point, as we get closer to putting economics around our assets and then thinking about moving things forward from a development standpoint, I think as CEO of this company, you have to look at every opportunity. So we will look at those things as they become options for us.
Great. Okay, let's get into, as you move from in the scale toward development and may produce, how's the infrastructure and access in the area?
Yeah, so the town of Lead, the town of Deadwood, our office is right in Lead. So it's, roads, power, water, it's all there. Obviously depending on what kind of material, there's probably going to be, a need for some kind of a mill or processing. But it's not like you're in the middle of nowhere where you have to run a power line up or put a new road in. That's already in place. So there are a lot of advantages to being where we are in South Dakota.
Makes sense. Let's talk about when do you think actually gold and silver will actually take off? I think it's going to be.
Again, as I said, I try to be neutral and just look at the information. I'm a real chart guy. I love charts because charts don't care what you think or what I think. It's all incorporated in there. So I think you're starting to see, again, all these signs of things turning. And I think that there's always a lag when the Fed's raising interest rates. And this is the fastest, steepest tightening in the history of the US, or in 50 years. I think that will have an impact on the economy. It might take another 6 months for it to get there. But next year and in 2025, there's almost $2 trillion in commercial paper coming due. It's $2 trillion. So, those tier one assets are going to get refinanced, and they're the best in class. So, their margins might shrink, but they're going to be fine. It's those second tier and third tier assets that might have a bit too much exposure to debt that are probably going to have to file and go bankrupt. So I think there's structural challenges that are created from raising rates from basically 0 to 5.5, and the US Fed might not be done. So again, I don't have that crystal ball, but at some point there's going to be a pivot. But I wouldn't also be surprised if this higher for longer concept played out, where you saw rates between 5.5 and 6 or 6.25 for another year. But I think the longer rates are kept up there, the harder the landing. And I think, interestingly enough, you've got the US raising rates and China's cutting rates, which is really interesting.
Yeah, I think it's a very fragile economy right now. Very fragile. You threw out a lot of prospects for the future. Did you want to talk about a certain timeline for best case, worst case?
With Dakota or the gold market?
Dakota.
Yeah. So I think the next catalyst for the market to really follow this discovery we have in the what we call the JB zone at Maitland in Homestake Formation is really exciting. So again, when we started doing this, it was proof of concept. We wanted to find mineralized Homestake Formation in the corridor. We've done that. We found that. And then it was, okay, well, is this really similar or analogous to this Homestake mineralization. Yes, box checked. So when you take away main ledge, which was the biggest ledge that was mined, which was 19 million ounces of gold, these ledges were between 1 and 5 million ounces. This tertiary, because of the length of it, because it's shallower, we can potentially deliver ounces and put some dimensions around the tertiary at Maitland a lot quicker, because ultimately we're going to have to get underground to drill off the JB zone, the homestake style mineralization. And in our last hole, we did hit two gold zones in one hole in homestake. So we don't know yet whether it's two distinct gold zones or part of one broader zone. And then this Richmond Hill drill hole last week, which was 300 meters of almost a gram in the Precambrian, in the basement rocks, really exciting because it opens up a whole new frontier for us. So drill results, expect at least once a month from Richmond Hill, kind of once a month, once every 5 weeks from Maitland, and then moving towards our maiden resource at Richmond Hill in Q1, probably around BMO or PDAC of 2024. We are permitting 2 earlier stage greenfields projects. One's called Blind Gold and one's called Tinton. Really exciting, have quite a bit of homestake data already on it. So while they're greenfields, it is coming with data. So we've got a robust pipeline of projects. And because of this consolidation effort that we've undertaken, going from 5,000 acres to 50, there's a lot of data. And then when you bring in this 125 years of data, it's a daunting, overwhelming task. So it's a target-rich environment, but it's a large concentration of ounces where virtually nothing has been done since 1996.
Interesting. Well, I think this gives people who are very interested in a company that has a big picture involved and wants to consolidate. It's a unique proposition, and I think that's very advantageous for a lot of investors. So anything you'd like to summarize before we stop?
Yeah, I think this is a management team that has had commercial success, that is fully aligned with shareholders. When you look at, what Jerry Aberley did to put this whole company together, the amount of money he has invested, and Bob and I, there's almost $11 million invested just between the three of us into this company. I don't know many management teams that have that kind of skin in the game. And again, to lure Quartermain out of retirement, he's thinking big. Steve O'Rourke, I think one year his budget was $3.5 or $4 billion when he ran global exploration for BHP. So you have that scale, the ability to execute, and that commercial alignment that I think is a rarity in the gold space. And it's in a tier 1 jurisdiction, phenomenal geology, private ground, so you can somewhat control your own narrative, and people who have bought in, great culture. So it's exciting.
Great, Jonathan. Well, I look forward to hearing the future prospects.
Thanks very much. Appreciate it.
Welcome. Thank you.